The music was like I was laughing too hard for the music.
All right. Okay. You welcome me. Welcome me on board.
All right, all right. Hey guys, welcome to The Market is Open. Hey Josh, how's it going?
Not bad.
Today we're going to be talking about Shopify. The stock just hit a 52-week high, at least on the Canadian exchange. It's a Canadian company. It also trades on the U.S. exchange, but they did hit an all-time high the other day. Obviously, everybody is working from home. We do have a Shopify video on our main channel, The Market is Open, which we'll put a link in the description where if you want to learn more about the company, it's a fast-growing e-commerce company. You can have a look at our video and we'll describe all parts of Shopify.
But the first thing I wanted to do is sort of if we can tell people what Shopify does and why it's so exciting. So it's kind of, I see it as sort of, a counter to Amazon, and they have two different business models, merchants and subscription solutions, but you're a bit of the expert. You made a video on them. If you can just tell our viewers what they do quickly.
I view Shopify, I think like Amazon is sort of the one-stop shop for everything. And I think Shopify is every other little website. They sort of support pretty much everything else. So if you want to buy something, you go to your favorite website, which isn't Amazon, and you can log in if you want to make a purchase. And Shopify powers the whole thing from the actual website itself to the purchase and payment options. It's all powered in the background by Shopify, and the front end looks like the website that you're trying to visit. And I guess Shopify makes money. You pay them a monthly fee, maybe $30 per month if you're small, up to $2,000 per month if you're a larger corporation. And they give you these solutions for your website to design your whole website and have, you can actually purchase apps and add features to your website for specific things that you need. And then as you make more money, Shopify takes a cut out of any of the transactions that they process.
Yes. So it seems pretty interesting. So it could be from small companies like entrepreneurs and, you just have your guitar shop, and instead of selling like online on Amazon, you got to send it to the Amazon warehouse. Then Amazon takes a big cut, or Amazon might not approve you. Instead, now you get to manage it all yourself. So that's why I kind of see it as that counter to Amazon. And then they also have larger brands. So a company like Heineken uses Shopify. So that means Shopify automates part of either their payment processing, or they could automate the entire website and back end. So we'll get into more of that, but it's a pretty exciting company. And then that's a big part of their revenue. And then the other one is sort of merchant solutions, which is also interesting. So we see a company like Square. Shopify has sort of their own merchant solutions, and I think part of their drop shipping is part of the merchant solution part of it, where they take a cut of the transaction revenue. Is that what that part of their business is?
Yeah, that makes sense. They have all these features like drop shipping, and you can even put your products now in the warehouse, similar to what Amazon does. So Shopify will own the warehouses, and you pay them a very small fee to keep your products there, and then that way they can ship it very quickly. So they're trying to sort of become Amazon, I guess, use their scale to lower the prices for all of their consumers, and that way they sort of democratize e-commerce for everyone.
Yeah, so that's what I find really exciting. So if you're Amazon, when you order on something, they put it in their Amazon box. The company sort of Amazon sort of ruined big brands. Like if you're Kimberly Clark and you sell diapers, Amazon has their own diapers on their product. And why is Kimberly Clark would you want to list on the Amazon website? Because Amazon says, screw you, we got our own brand, we put it in our own box. But Shopify seems to be a way to democratize it by letting small businesses do it, but also to say, hey, you can protect your brand. And then they also offer these solutions. Right now, I don't think it's available, but in the future, if they have a warehouse where smaller companies can put their products in the Shopify warehouse and then maybe offer customers one-day shipping or quick shipping, which a lot of customers will sort of demand at some point in the future. So that's pretty exciting, the Shopify warehouse. And then bigger companies could probably always be able to provide, quick shipping to its customers, but would want their back end. So I think it's a really exciting company. And, they've been growing revenue over on average 50% a year for the last 6-7 years.
Yeah, it's still pretty tiny right now. It's 1.5 billion per year. I mean, you're looking at Amazon, 200 times that. But Shopify is clearly growing very quickly. So we're going to have a look at this article here. Shopify shares rally more than 50% in 7 days as the exec, he happens to be the CTO, touts the growth of the company. So this guy, Jean-Michel Lemieux, says that it's almost like Black Friday every single day. Of course, people are staying home because of COVID-19 and they have nothing to do, so they're all shopping online. And if we look at this chart over here, which looks confusing, But BCFM is Black Friday, Cyber Monday, and you can see that the level is normally a lot higher for those couple of days. But now slowly, we're seeing the trend rise back to that level, even though it's not actually Black Friday. Though sales are going pretty crazy because so many people are purchasing online from Shopify run
Yeah.
stores.
Just to be clear, though, I don't think this is sales. I just think it's traffic. So people might be buying a little less, but I think it's probably mostly accurate that if you're on a company's website, you're probably buying. But
Yeah, I think he also made a comment that
people are probably bored right now and they're just, browsing the internet like crazy looking at stuff. But and people don't have the money to be buying, frivolously. So I think there's some handicap to that, but I think sales have to be up quite a bit if they're showing this.
Yeah. Yeah, it doesn't say like what they're spending, like if they're spending more or less, but yeah, more people are being driven to these websites, which usually means more money for the company, and they make money by the more volume of transactions that they process, the more money that they make. So the more their merchants, their customers are selling, more items, Shopify capitalizes on that.
Yeah. So, and Shopify says a lot of brick and mortar stores who have sort of neglected online are now moving online. So that puts a lot more items online than it ever was. So Shopify's business, as you said, it's going Black Friday every day.
This might speed up the transition to having more people use online systems. If we bring up the chart over here, looking at brick and mortar stores versus e-commerce, and of course e-commerce is dominated by Amazon, but it has some other companies as well. We could see that the entire industry has grown significantly, but e-commerce is growing a little bit faster than the industry, quite a bit faster.
Yeah, so I mean, we're seeing if we look at our chart, which is interesting because we want to do a little quick valuation of Shopify at the end, sort of, is this a stock worth buying? So we could see the whole industry, this is just the US, so the whole industry is at 3.8 billion in 2019. This is a cool website. And in 2010, the whole industry is at about 2.6, 2.7 billion. That means that total retail is growing at 10% a year, which to me seems a little too quick because that's all of retail. But I guess maybe online has sort of added new channels of retail that previously didn't exist. So it's sort of made the market more efficient. E-commerce revenue is growing at 11% a year. What do you think this caps out at? Because at some point, we were talking a bit before, but at some point there will be sort of a point where retail can sort of maintain some sales. Like the fact is, online is only 16% of sales and it's growing, but I think it sort of maxes out at some number, like 30% or something like that. What do you think the number is?
Yeah, if you look ahead, maybe 10 years, it goes from the 16% that it's at right now to 30%, but also the entire industry grows as well. So that 30% is actually a bigger chunk of the overall pie.
Yes, you're right about that. So yeah, so let's say so that will come in mind maybe when we do a valuation. And we wanted to sort of look quickly at Shopify shows its performance versus Amazon. And so right now it shows that Amazon has 37.3% of US sales and Shopify has an impressive 6%. They passed eBay, who was 5.7%. So I see Shopify as the big, threat to Amazon. Amazon tries to quash all their competition and kind of makes you say, well, screw you, Amazon. I'm going to use Shopify instead. Like the risk to Shopify is more like how many businesses can be like Shopify. It's hard to replicate Amazon's business model. So that's the advantage of being Amazon is like, they spent a ton of money developing their business model. They lost money. Like if you're a shareholder of Amazon, that company has not made money for 20 years, but now it's sort of like Uber, where Uber has spent so much money developing their network that they sort of have a monopoly. There's risk to self-driving cars, or there's risk to Uber's business model for other reasons that Andrew's talked about in another video, that what if autonomous driving becomes a big thing? That's a huge risk. Amazon doesn't have that type of risk. The online selling market is an extremely attractive market. It's hard to replicate Amazon's model. It's extremely expensive. You can't really do what Amazon does. The only way to beat them is companies like Shopify, and the risk of Shopify is, how strong of a competitive advantage are they, considering they're somewhat big at 6%. So that's sort of what we wanted to talk about on Shopify, and let's sort of do a quick valuation. So last year we saw that Shopify had 1.6 billion of revenue. We said, what if Shopify, so Shopify talks about their gross merchandise volume grew at 48% last year, and we saw their sort of revenue decline, their growth rate decline. But we sort of were optimistic because we're trying to develop, a very optimistic valuation. And we said, we sort of want to see a maximum. So we said, what if they grow at 37% a year for the next 10 years? And Shopify's internal guidance for the last 2 years said they would grow at 37%, even though they actually grew a little quicker the last 2 years. So we said they could grow to 37 billion of revenue in 10 years from now. we kept their operating margins pretty similar to what they were before. So we said their costs of sales would be about 22 billion. And then we said their sales and marketing would drop, their R&D would stay high, and their G&A would stay high. So we said that this company 10 years from now could maybe make 8.5 billion operating income and 6.7 billion after tax. So we were trying to figure out sort of a valuation where they get to. So if you were buying a company that was going to make 7 billion a year, and then maybe their growth prospects are still probably pretty good at that time, in 10 years from now, like how attractive is this stock, which sells now at 70 billion? I think it's still somewhat attractive. It's definitely not a short or a sell, but there's a lot of risks in that trajectory. What do you think?
Yeah, I agree, but at least it shows that sort of the valuation is starting to make a little bit more sense, even though it's really high. Like some people think it shouldn't have this valuation at all. But if you look ahead, maybe 10 years, you would see a company maybe trading at 10 times earnings with a similar, growing at 8% from now until 10 years from now.
Yeah,
Like,
exactly. So like if we were to do 8 years from now and then we had some high growth rate, that the valuation, like the terminal value of a 10-year valuation is about 88 billion, and then they have profit making for the next 10 years. Like what it's worth today, I could see it maybe going up maybe like 30, 40% more, but you have to think that it can't really, like once we get to a valuation of about 110, 120 billion, I think that's where it caps out for Shopify, at least right now. And then normally investors expect, to make 10% a year or something like that. So I think we could still see a bit more upside in Shopify, maybe 34 to 40% more upside if the bulls keep, roaring. But it's, I guess at this valuation, when you're assuming 37% revenue growth any year, any stumble over the next few years could, that could crash the valuation 50, 60%.
yeah.
Okay, so I hope you guys enjoyed our video on Shopify.
Be sure to check out our other video on the main Market is Open channel, link in the description below. And thank you guys so much for watching.